He's coming via Zoom.
Oh, he is? Okay, good. Good morning, members of the Small Business Development Committee, House Small Business Development Committee. I see we've got a quorum and I'd like to begin. But before we start, if we could get Floor Leader Larikia to open us up in a word of prayer.
Lord, we love you. Thank you for this day, God. Just be with us, guide us, and direct us in all that we do, and how we need to serve the people of this state, and that we would be mindful that we answer to them and we represent and work for them. And God, just guide us in what we do, the decisions that we make, that they would glorify you and serve the state. In Jesus' name we pray. Amen.
Good, thank you. Okay, well, thank you, ladies and gentlemen. I appreciate y'all being here. Today, we're going to have a somewhat of a short program. My wife was scheduled to come up here, but was unable to make it. So we've got Ben Andrews, who's with the Advanced Technology Development Center at Georgia Tech. He's a program manager, and he will be making a presentation. So, Ben, you have the floor.
Thank you, Mr. Chairman. First off, thank you all for inviting me to speak, and I want to thank you and the committee and the legislature for your continued support of ATDC. I'm going to tell you a little bit about our program today for those of you who may not be familiar with us, a little bit about the successes and things we've had in 2020, how we've dealt with the pandemic, and where we plan to be going in the future. First off, for those who are not familiar, the Advanced Technology Development Center is the state of Georgia's technology business incubator. So we work with scalable technology companies. So we're working with small businesses that one day hope to be big businesses. We have been around since 1980 and are housed at Georgia Tech. We are a mostly autonomous running thing, but Georgia Tech does a lot of our overhead, keeps our HR costs down, things like that, to make it so that it's more efficient use of taxpayer dollars. But we work with early stage entrepreneurs and companies trying to help them scale to the point where they're making over $1 million in annual recurring revenue. And once they hit that for multiple years in a row, they graduate our program. We have 3 levels of programming. We have an educational level, which is open to anybody who wants to join. It is $100 a year. So that way the people who are in it have some money put in, a little bit of invested interest, kind of some skin in the game, as most of them like to say. But we offer classes like customer discovery, which is kind of a crash course in marketing research as it relates to a disruptive product or entering something new in the market. We teach financial literacy. We teach investor readiness. We also teach a lot of one-off classes. Tomorrow or later today, for example, we're going to have a class on green technology and how to get better into the market for things that are clean tech, green tech, things of that nature. We also have a number of sponsors that help fund some of the things we do. There are some things that are very useful to entrepreneurs that we can't use state funds for. So we are creative. We get outside sponsors who bring in money, offset some of those costs to make it so that we can stretch our money even farther. But a lot of these sponsors are service providers, law firms, accounting firms that want to meet early stage startups. So this is a way that our Educate members can get a meeting with a big law firm, for example, that normally they may not be able to get a meeting with, and makes it more accessible to a lot of entrepreneurs. While we are housed in Atlanta, our program is open to anybody in the state, and that's actually my role, is I'm the statewide program manager. Before coming to ATDC, I spent about 6 years in economic development in rural Georgia, actually in my hometown of Americus, where Mr. Chokas is from as well. I can actually see his house from my parents' house. So yeah, small town. But I came to ATDC about 3 years ago in a different position, then moved to statewide program manager. But we work with other incubators and other co-working spaces around the state that may have space, but don't have quite the funds that we do or the amount of local available talent and resources. And we will partner with them and let any members of their space have free access to our Educate level program. So that way entrepreneurs in other parts of the state can get access to more of the resources that normally you would only have in a larger city like Atlanta, New York, Boston, LA, et cetera. This is a program we've only had for a few years. It started about 2 years before I started with ATDC. So ATDC was founded in 1980. This program is about 5 years old. After the 2008 recession, ATDC really realized they needed to be more to more people. And we created the educate level programming. And that was what enabled us to expand across the state more and work with more people. After the educate level, we have accelerate. Accelerate is the first level where you have to be invited in. These are early stage companies, typically 1 to 5 employees, but they're all companies that have a product. They've got at least one person working full time, so it's not a side gig anymore. And they're typically working on getting their first customers, raising some money so they can expand, things like that. At this level, you get a dedicated coach. One of the things that really makes us a little different from a lot of others is all of our team are actual entrepreneurs. They're all people who've been in a startup before and can coach them through this. Without getting too in the weeds on everything we do, after the accelerate level is our signature level. This is where companies have grown, they've scaled some, they're hiring up employees, they're trying to hit that $1 million a year mark, and we move them to one of our entrepreneurs in residence. While all of our coaches have been with a startup in some type of role, our entrepreneurs in residence are people who specifically have the experience of being the founder or co-founder of a startup from bootstrap to exit. So what we mean by that is all the way from the starting of the company to raising money, scaling up, getting your first customers, growing, hiring a bunch of people, and then eventually either taking the company public or selling it to a larger enterprise company. Our entrepreneurs in residence are part-time. They're on a 1-year contract, typically because they are people who are entrepreneurs that are going to want to go do this again. The 4 people who were entrepreneurs in residence when I started ATDC, now 2 of them have been recruited by other startups to CEO role. And 2 of them, well, one of them has a company that's currently in our Accelerate portfolio. And one of them left us and started another company that actually about 9 days ago was acquired by a larger company. So we tend to have people who rotate through that. We really want that talent because we want the entrepreneurs who are in our program to know the people working here are not people that did this once 30 years ago and then have just kind of been sitting back relaxing. These are people that are hungry, that are working on it, that are going to do it again, that really get it and get what the climate is like now. Because raising money in 1980 versus raising money in 1990 versus today are very different. And it doesn't mean you can't have done it in 1980 and not do it today. It's just something that you have to be continuously doing and working and seeing how the market changes. We really like our coaches to be like that. Mr. Jokas, if you don't mind, I'm actually going to share a video that is a couple of our graduates from this past year talking about ATDC that can give a little bit more of an overview of what we do.
That'll be fine. Go ahead and show it.
Okay. If it will come up. All right, can everybody see that?
Can you see that? Yeah. Here we go. Good.
Is there sound?
No sound.
Let's try that again. Well, I'm going to apologize for that. I'm not sure why the sound's not working. Sorry, we use Blue Jeans, not sound, so not Zoom, so I'm not as familiar with the system right now.
Hey, Ben.
I can.
Check the
Yes.
chat. Media Services is letting you know how to do it.
Great. Top of your screen. I do not see what he's saying. I should be seeing. Sorry. Yeah, I'm sorry. I don't see what he's saying. I should be seeing the share sound button. I can send this out to the group later or share this with you, Mr. Jokas, and you can share it with everybody if they want to watch. But it is a video of a couple of our graduates from this past year talking about what they got out of the program, why they enjoyed it, and really the resources that it provided them. I see Darshan's raising her hand.
We have a question.
Yes.
Representative Kendrick.
Good morning, everyone, and thank you to ATDC. I have been really impressed by the program over the last years and was able to take a group of legislators over to ATDC to see the different entrepreneurs that you have there. So I have two questions. The first one is, can you talk a little bit more about the ATDC showcase? Because I've been a couple of years, and I think every legislator should go over there and see the innovation. And I know you have an award ceremony that you do that's very inspiring. And then the second question is, does Georgia Tech take any type of equity stake in any of these emerging companies? I know some programs do take a small equity stake when they're helping entrepreneurs.
Yes, thank you, Representative Kendrick, both for your questions and for supporting ATDC in the past. As she said, she has been to our showcase a few times and brought groups that I've shown around. We do an annual showcase that highlights our companies. What this is where we have our graduation, and this is what I was going to talk about after the video, so this kind of works perfectly. We have every year we graduate companies. So when a company hits $1 million 2 years in a row in recurring revenue, that's important, not just one-time sales, but some type of subscription model, something like that, they graduate. Before our graduation, we have a showcase that day where all of our Accelerate and Signature portfolio companies can come and have a booth. We have investors, we have people from the community that are interested, we have industry partners that may be interested in partnering with or buying from one of our startups that come and visit this event. I was unfortunately disappointed that we were not able to do it in person in 2020 because we were going to change up the format of it a good bit and have it a lot more about the industry verticals that we have. But it is a big annual event. I encourage everybody to come to it. Also, once we are back meeting in person on more things, please come tour the ATDC and we can show you some of our facilities. We have office space for the startups, but we also have a hardware physical product space where people can work on prototyping and early stage. I will also say that that space was completely sponsor funded. We did not use any state tax dollars to do that. We were able to go out, raise funds from companies that were interested in working with early stage physical product companies and build that space for entrepreneurs. Representative Kendrick's second question was, do we take equity? And no, we do not. This is another thing that differentiates us from a lot of other programs. We are a resource to these startups. We are viewed more as an economic development engine. We are not trying to make an ROI from the startups. This does a few things. First off, it makes us more accessible to a lot more people. It makes startups more likely to use our services. It also makes us more of an honest broker working with the startups. They know we don't have a financial stake, so we're not pushing them in a way that may be financially advantageous to ATDC. We are always going to coach them in a way that we feel is the best interest of the company itself. We do have fees to be a member. They are not very much. Like I said, they're $100 a year to be an Educate member. To be an Accelerate member is $1,200 a year, and it's $2,000 a year to be a Signature member. If you are not in Metro Atlanta, those numbers are a little bit less because you're not as close to us and getting as much one-on-one coaching. We do a lot virtually, so you are still getting some coaching that way. And if you're in the Accelerate and Signature levels, you have to have been invited in by coaches, which means you have a personal relationship with some of our coaching staff. So you are going to be getting that. This past year, we ended up graduating several companies, which I think they are a good representation of the many different types of companies we work with. So without running deeply into all of them, we have Cypress.io, which is a software company that is in security space. Emergy is a company that is in renewable energy. They work with hydroelectric power. Quest Renewables is in the solar space. They build solar racking systems that can be more efficiently. If you see the solar panels that are above the parking lot at Mercedes-Benz Stadium, that is their handiwork. Remedy is a healthcare IT company. RoadSync is a company that is in logistics. Springboard is another healthcare IT company. Steady is a company that helps people on the gig economy manage their resources, manage their money better, scheduling, things like that. And TrustStamp is another information security company that is, I always get in trouble for what I say, it's biometrics adjacent. So we graduated a great group of companies this year. And instead of having the large showcase like we normally do, what we did is, again, sponsor funded. We had a movie night where we rented some space at a movie theater and had it outdoors as a drive-through movie. And we showed the graduation ceremony that was recorded digitally so it could be done at a safe distance, the video that I was going to play for you earlier. And then we showed Ghostbusters because it was around Halloween. And we had sponsors who helped pay for that. Notably, one of the sponsors, or several sponsors, were former graduates of ATDC. Despite 2020 with the downturn early in the year, we had a lot of startups that were really successful. Two of our startups last year of our graduates, SalesLoft and Greenlight, both achieved unicorn status, which is where they have a valuation of over $1 billion. We continued with a couple of our programs that I'm going to tell you about. Industry Connect is a program where we help introduce startups to big enterprise and kind of help them get those conversations going, get in the door, navigate that process. It's difficult for a startup to get sales in a big company, and it's also difficult at times for the company to navigate working with a startup. Just the sales cycles are different, the speeds at which they run are different, the amount of red tape that they have to go through sometimes with a bigger company is something startups aren't used to. Also, if you're somebody in a company and you're the champion for the startup, you may not have done this before and may not be aware of what red flags and what red tape you're going to hit and what roadblocks there are going to be. So we help people navigate that. We had about 75 Industry Connect sessions last year where we brought companies in to meet with multiple of our startups, and we're able to help create over 30 pilot programs and relationships through that program. Our other big thing is Investor Connect. A lot of startups early on are raising money through venture capital, private equity, angel funds, things like that. And we help make a lot of those introductions. Last year, the first year as ATDC, our startups set a record, raising $56 million. It was the most they had ever done in 1 year. The next year, they raised 130. The next year, they raised about 110. Last year, we thought the numbers were going to be very depressed. We did not expect to hit that $100 million mark, especially in Q2 when numbers went way down. But Q3 and Q4 were really strong in the venture capital market, and our startups raised over $200 million. So nearly twice what they had ever done before. We haven't really dug into all the data on that, so we don't know what was the thing. So, part of it was, I think part of it is also there were a lot of existing investors who decided to shore up investments in startups that they had and put more money into them to make sure they were able to weather the downturn. And we've had a lot of companies that have had to get really creative. We have a lot of companies that, their only customers may have been airlines, or their only customers may have been hotels that have been able to be successful and continue on while their customers were having a significant financial downturn. It's really been impressive to see how some of these companies have pivoted to new markets or pivoted to a new service that has kept the relationships with their existing customers open. So yes, I'm seeing Representative Kendrick with another question.
Representative Kendrick, yes, go ahead.
Thank you for that. That is amazing. I know private markets were unusually strong last year, so that's good to know that the flow of capital and capital raising didn't stop during the pandemic. Does any of that, or do you know if any of the businesses were able to take advantage of any of the PPP funding? I know that there was a clause in there, an affiliation clause, where if you were affiliated with like a VC company, it sort of excluded you. But do you know if any was able to take advantage of those loans, or do they have to?
We definitely did have some startups that took advantage of that, especially some of our earlier stage companies that hadn't raised any money yet that needed that to get through. I've talked with a number of our startup CEOs that talked about their experiences with PPP loans that were able to get those loans. I don't know all the exclusions of it. I know some of our later stage companies were able to get it, but it may be that some of them had not raised money or maybe had not raised venture-backed money. We have companies that obviously are raising money from the numbers I just told you. We have some companies that are pretty far along in our portfolio that have managed to do it completely off sales and bootstrapped early on and did not raise any money. So it really depends on the startup. So some of them were able to use that, especially because a lot of them are reliant on a smaller number of customers early on. They're doing those early stage pilot programs. So if one customer is hit hard, it could represent a third or half of the revenue for this company. We did see a downturn in the number of startups we're working with, being honest. At the start of the year, we had probably about 200 companies in our portfolio. Now we are at a little over 100 Accelerate companies and about 35 signature companies. A lot of these companies, were people who were having trouble before the pandemic, and the pandemic really showed them, hey, it's time to move on to something else. Some of them are companies that just decided to shelve the product for a little while and said, we're early stage enough that we can wait a little while, come back in a year or two, back to this idea. And some of them are companies that pivoted to a service-based model or more of a lifestyle business, as we call it. We are working with companies that are trying to scale. The goal for ATDC is to create lots of jobs in Georgia. So if a company hits a model where they say, we're making good revenue, there's 5 employees, we're happy with what we're making individually each, we're just going to keep doing this service and we're not going to scale anymore. That's fine. That's a win. That's 5 new jobs. But we're going to transition them back to our Educate program so we can keep the relationship open, but open up some spot in our coaching portfolio for new companies. There's good and bad with the fact that our portfolio got smaller this year. Unfortunately, we're not working with as many startups. Fortunately, it meant when we had to take on some budget cuts and we were able to eliminate or hold off on filling some positions that were already vacant. So we did not have to lay anybody off on the ATDC staff, but we were able to reduce our coaching staff a little bit. We had an open coaching position, and we were able to eliminate a position that did all of our social media management, relationships with sponsors, and things like that. So my relationship is I do everything with all of the people outside of Atlanta, but I used to manage sponsorship. So I've taken that back on so that we could reduce headcount, save some money on the budget without reducing our services. It also gave us the free time to do something that we've wanted to do for a while, and that was put a lot of our content online, which makes it so that we can much better serve people outside of the metro Atlanta area. So yes, one more question.
Yeah, Ben, we're going to, Dashawn, you can have one more question. Thank you.
I'm sorry, last question. Does Georgia Tech put out an economic sort of impact report? Because I'm always worried that we incubate and accelerate all these startups and then we lose them to New York, Austin, and Silicon Valley, and we don't keep the dollars here. So does Georgia Tech have any information on that?
I don't know if Georgia Tech specifically does. We do keep track of our startups for 5 years after graduation. I can tell you the vast majority of them do stay in Georgia for that 5-year mark. About 90, a little over 90% of our companies are either still in business or have had a successful exit where they've sold the company at the 5-year mark. And just so I'm clear, when I say a successful exit, that doesn't mean they sell the company and it goes away. We have a company that recently sold to Peloton, and they're a standalone subsidiary. So they're still here, they're still doing what they're doing, but now Peloton owns it. And the owners don't have to worry about payroll and stuff as much because Peloton's funding it. We have things that happen like that all the time. And the 2 unicorns that I just mentioned, SalesLoft and Greenlight, are very much still in Atlanta, growing, scaling at a great pace. I don't know the specific number of jobs, but between the 2, I'm going to guess it's over 300 jobs in Atlanta, if not 400. And yeah, somebody just yes, in chat what my email is. My email is ben.andrews@atdc.org. I'll put it in the chat as well, so you can contact me if you need. But we do that report every year, and I believe that it is shared with the legislature. The last thing I want to say is this has also been a pretty good year for our statewide program, not just Atlanta. So like I said, this is the program I manage. I have 3 coaches outside of Atlanta that one's in Athens, one's in Savannah, and one's in Augusta. We've only ever had one signature company outside of Atlanta before, and that was a company in the insurtech market called LBA Ware in Macon. But last week, actually, we added our second regional signature company, and that is Corstrata, a wound care company that does telemedicine services. It's based out of Savannah. I was really excited about them. This is a company that's been part of ATDC for as long as I've been there. I've seen them at pitch events. I've met their founders before. They're a great company. They're doing great work. So it was really exciting to get a Savannah-based signature company last week. And the other thing I mentioned is I'm also managing sponsorship right now. And we're always trying to come up with new and creative ways to increase our services without only having to come to the legislature and asking for more money. And last week, we announced that we are going to be having a new partnership that is funded by T-Mobile, where we're going to be hiring a new coach and having programming for the next 3 years around 5G and mobility space. So we're going to be working with startups that can be using 5G systems. Now, a lot of people, when they hear that, think telephones, cell phones, telecommunications, but there's a lot more that can do it. It's a lot of connected devices and logistics, healthcare and healthcare technologies, wearable technologies, which can include healthcare devices that track biometrics and things like that. Shipping and freight, all that is really big with the logistics space in Georgia. There's a lot of uses for 5G, and we're really excited to see what kind of startups we get in that program. And that is a program that, we just had a nationwide announcement through T-Mobile with. And we've actually had companies before in other states that have said they've outgrown their market and have moved to Georgia because they've seen what we've had going on to join ATDC. And we're hoping to continue to see that. We're also seeing a lot of dollars from outside of the state come in to invest in our companies. We do road trips each year where we take companies to Silicon Valley, to New York, to Boston, places like that. And we've really seen a lot of companies that have said, we've kind of ignored the Southeast for a long time, that are now investing in Georgia and seeing the quality and the talent of the startups we're having. And the first year we did the road trips was the first year we broke that $100 million mark. But we're seeing a lot of money from other states come be spent to support jobs in Georgia through those. And we're really excited about it. And if anybody has any other questions, I am happy to answer any. And I also did just share my email in the chat so that if anybody wants to reach out to me for anything that you may come up with later, or if you are interested in our showcase and how to attend that in the future, we would be happy to have you.
Cool. Well, that's great, Ben. Thank you. Thank you very much for that informative presentation. I appreciate you spending the time with us this morning. And Representative Kendrick, thank you for the questions. We didn't have any questions from our people that are here, and so we kept everything going. Wanted to share this. If you have anything that you'd like to share with the committee, please send it to Blake Doss. I think y'all have shared y'all's email addresses, and he can distribute it to the rest of the committee. And unless there's any further business, one more thing, say hello to your mom and dad.
Thank you.
Good. Unless there's any further business.
The video's already been sent to the committee.
Oh, good. The video's been sent to the committee, so each of y'all should receive it if y'all have time to take a look at it. With that being said, this meeting is adjourned. Thank you.